In an industry where a company that's a long-term investment is hard to find, there is one gold company that may pique your interest for gold investing, and that is Sandstorm Gold. Sandstorm Gold is a royalty and streaming company that provides capital to gold mining companies in exchange for a cut of the gold that they dig out of the mine. And Sandstorm buys that gold at a low fixed price, typically around $400 per ounce on average. There are a few gold royalty companies out there, but we think Sandstorm is worthy of your own due diligence. As a disclosure, we are proud shareholders of the company, and although we hardly advertise gold stocks, we believe in the Sandstorm management, led by former executive of Silver Wheaton, Nolan Watson. Sandstorm is geographically diversified with exposure in North and South America, Africa, and Asia, and has 21 producing assets that have netted them an increasing amount of positive operating cash flow and revenue in the past 4 quarters. They also have 22 mines in the development stage that will increase their cash flow substantially in the next few years. Be sure to check out Sandstorm Gold at sandstormgold.com/invest. Hi, everyone. This is Jason Bjork of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is former Assistant Treasury Secretary under President Ronald Reagan, and he was an associate editor and columnist for the Wall Street Journal. He's accomplished so many other things in his life. I could probably spend the entire interview listing them. Paul Craig Roberts, thank you for joining me again.
Pleased to be with you, Jason.
First of all, congrats on being named to Washington Post fake news list. Do you plan on suing them for libel?
Well, I don't know. I think there is a suit that Naked Capitalist is bringing that I might join. It really just depends on whether or not this listing is going to be used in any way against those sites by social media. For example, if Twitter or Facebook refuse to let their users link to articles on the sites on that list, then I might join it. If this is just some kind of nonsense that some group that's too afraid to reveal who they are got up to, probably just ignore it. So if it doesn't really have any consequence in terms of blocking people's use of links and access to those sites, I don't think I'll pay attention to it.
There's enormous censorship, if I could add that, from on my own YouTube channel in the last 6 months. YouTube has been really censoring us badly, just talking about different views on investing in the economy. I know we share similar views, but I know we have limited time, so I want to transition now to the questions. You know, Trump is actually in office. The Democrats tried a lot of tactics to stop him, you know, with the faithless electors and so many other trying to get a recount of votes with Jill Stein. What's your opinion so far of Trump's cabinet and his executive orders? Are you worried that the president has taken way too much power with Obama and Trump now with executive orders compared to what the founders wanted in the Constitution?
Well, if so, it wouldn't be Trump's fault. He would just be inheriting whatever had been established by previous presidents. And generally that stuff sticks. It's hard to go in and undo those kinds of changes once they happen. I think that what Trump is doing with these executive orders is trying to show he's serious and trying to just move ahead and preempt all of the nonsense. I think it's very important that he very quickly deep-sixed the Trans-Pacific Partnership. That was one of his promises, and he did it right off the bat. I think some of the others probably could have been dealt with in a different way. For example, the reason there are so many Muslim refugees or immigrants is because of the of Washington's wars in the Middle East. When you bomb 7 countries for 15 years, you kill and dislocate a lot of people, and they leave. So the easiest way to stop the refugee problem would be to stop the wars and use the money instead uh, to rebuild the countries you've destroyed. So I think that Trump really should have said that. He should have said, hey, look, we're not taking any more refugees, but we are stopping the wars, so you don't need to leave, and we're going to make some restitution for the crimes of the Bush and Obama regime. Now, if he'd said that, that'd be a very hard thing to complain about. So I think that was a mistake. I don't think he handled that well. I think that it's very important that he establishes normal relations with Russia, and I was very pleased that his first week in office he calls Putin. I think Putin was the third head of state that he contacted after the British and the Germans. So that was very important, but I'm afraid he didn't do what he should have done. If I had been his advisor, I would have told him that the first thing you tell Putin is that the sanctions are history, and then you apologize for your predecessor imposing them because they were an insult based on lies. And that solves all the problems right off the bat, and trust can begin to form. And after trust forms, then it's possible to talk about reducing nuclear weapons. What's come out of this, if you can believe the news reports, and you never know, is that the Trump people are talking about connecting the removal of sanctions with nuclear arms reduction. That's not going to work because the Russians are confronted with 28 NATO countries. And the nuclear weapons are the way they deal with that. And so if you come at them right off the bat, looking like you're trying to disarm them, make them more vulnerable to these attacks, after they've been demonized for 3 years and threatened and all the rest, that's not the way to start. So I was disappointed that he didn't have better advice. But of course, there's not a government in place, and much of the permanent government seems to be working against him. So that is, I guess, a cost of moving quickly. I don't know how it's going to work out. The people he's appointed, they're not really the kind of people you'd like them to be, but on the other hand, if it's going to be changed from the top, you've got to have tough, strong people. Otherwise, they get run over by the ruling establishment. So I'm prepared to wait and see what they do, to see how the government handles itself once it's in place.
Yeah, the mainstream media is against him. The bureaucracy is against him. The Democrats are against him. But, from his cabinet, seems like they have a lot of business experience. So I'm cautiously optimistic that once more of his cabinet actually gets appointed, and I know the Democrats are playing a lot of tricks to delay that, but once more of his cabinet is appointed, I think they have the ability to, help create jobs, help reduce regulations and taxes, and make it easier for small business and medium-sized business in the United States to make investments into our country and create jobs.
Well, it remains to be seen.
Now, I want to ask you about supply-side economics. You're considered, along with Art Laffer, I guess, the two fathers of supply-side economic stimulus. Reagan was able to do this in the 80s. The U.S. didn't have nearly as much debt back then. What is supply-side economics? A brief summary of it for our listeners who are not familiar. And do you think then Trump is trying to do similar stimulus programs to what Reagan did in the 80s?
No, the situation today is far different. The Reagan administration was not confronted with the mass movement of manufacturing and professional skill jobs offshore. The jobs were still here. The problem Reagan faced was stagflation. That meant sort of a simultaneous rise in unemployment and inflation, so that the policymakers were losing the ability to fight one with the other. The way the post-war policy had worked, if inflation got out of hand, you raised the unemployment rate, and inflation fell back. And once the inflation was under control, then you expanded the money supply and put the people back to work. So that's, or if unemployment rose, you tended to juice up inflation to get them back to work. So that had broken down, and the trade-offs between inflation and unemployment weren't working. And so you had to have a new solution, and that's what supply-side economics was. It pointed out that the traditional macroeconomic policy only worked on the demand side of the supply and demand, and it would use monetary and fiscal policy either to raise demand or decrease it. And the assumption was that these policies had no effect on the aggregate supply schedule. And supply-side economics said that's wrong, that some forms of fiscal policy shift the supply schedule, and such as lower marginal tax rates. This makes it possible to have a larger quantity supplied at every price. And so what the policy should do is it should tighten up on monetary policy and loosen fiscal policy, not by running up government spending, but by cutting the marginal tax rates so that the after-tax return on investment would go up. So that policy worked. That's not the problem we have now. The problem we have now is so much of the economy was just moved offshore. So the American people are no longer connected to the production of the goods that they consume. For example, Apple computers are made in Chinese factories in China. They're sold to Americans, but the Americans don't have any incomes associated with the production of the Apple computers. So when you start multiplying that through all the products, the shoes, the clothes, all the appliances and so on, you see that you've got people who don't have the income from jobs to support aggregate consumer demand. So that's the problem here. This requires bringing jobs back. Trump seems to think he can do it with tariffs, but tariffs are against the World Trade Organization and the World Trade Agreement, so he can't really do what he thinks and slap on the tariffs because it would be in violation of the WTO, and I think we can be penalized and sued and so on. The only thing that I've been able to come up with that he could do would be to change the way corporations are taxed. You would tax them, their tax rate would be determined by the geographical location where they add value to their product. In other words, if they produce the products they sell to Americans abroad, they would have a very high tax rate. If they produce the products they sell to Americans domestically, they would have a low tax rate. And the difference in the tax rate could be used to offset the lower labor and regulatory costs that they get from abroad. And that could force them back. That's the only thing I can think of. Whether he can get that passed through Congress, given the fact that the Congress still belongs to the special interest groups that fund their campaigns, I don't know. I don't know if he could get that through or not.
That's some excellent analysis. I was actually going to ask you a follow-up question then about Trump's tariffs, protectionism, and the damage it could potentially do. I know you study financial history like I do, and when I go back and look through tariffs, the history in the United States, whether it's Smoot-Hawley or others, the U.S. has got into really bad trade wars where countries, retaliate on each other, tit for tat. Then they start, restricting exports of key commodities after that.
Well, I don't know, Jason, that the history of tariffs is correct, the United States developed as a result of protection. It didn't develop as a result of free trade. In fact, the American economy essentially was not dependent on trade. It was dependent on the domestic market. And the domestic market was growing because the rising productivity, most of it was going to the workforce. So as productivity rose, so did the real wages of people, and therefore their ability to consume, to demand goods and services rose. And that's where our development came from, not from some kind of free trade mechanism. So the notion that tariffs are destructive, basically a country is obligated to its own citizens. And therefore, if it needs protection from foreign goods in order to develop its own industries, it really has to be done. The government can't say that we're going to put our development behind in order to keep open markets for other countries. That's never really happened.
Yeah, I've heard that argument. Weren't those tariffs that the U.S. put on other goods a long time ago, weren't they lower tariffs though? I mean, now if you're a U.S. auto manufacturer and you try to sell cars in Japan or in South Korea, you're facing, 20, 30% import tariffs and high tariffs like that. So, I don't think there was that quite a high tariffs when the U.S. was developing. Those high tariffs are what stop trade between countries.
Well, you're getting into a very big topic here. The Japanese have their own ways. They simply don't buy foreign cars. And the American cars were really made for a different kind of situation. They were huge and big, and still are. You look at these SUVs, you don't see those types of vehicles in Europe, in Japan. So I don't think tariffs really played much of a role in whether or not foreigners bought our cars. I think on the whole, Detroit was just focused on a way that it stayed in for too long and therefore opened its own self up to foreign competition. If you wanted a car that handled well, you had to get really a German car or maybe an Italian car. You wanted a lightweight, reliable car that got some reasonable fuel mileage, you wanted a Japanese car. I don't think these decisions were tariff-based.
Okay, so you don't think then if Trump puts a 20% import tax on either American corporations manufacturing in Mexico or Mexican goods being imported into the United States, even silver, you don't think then that would drastically hurt trade then between the U.S. and Mexico?
Well, you see, it's not trade, Jason. It's not trade between the United States and Mexico. What it is the American manufacturers have relocated their plants to Mexico to take advantage of lower labor and regulatory costs so that their profits go up. And the goods that come back in are goods made by American firms offshore to be sold to Americans. So that's not normally what trade is. Trade is when Mexican companies are producing products, and American companies are producing products, and the two countries sell their products in each other's domestic markets. But the offshoring is not trade. It's the relocation of where goods for American markets are produced. The reason they have called jobs offshoring free trade is because the public and economists are brainwashed into believing free trade is good, and so if they can call something that's not free trade, people accept it. So that's how free trade gets pulled into NAFTA and TTP and the Transatlantic Investment Partnership. It's a cover for activities that have nothing whatsoever to do with free trade.
Yeah, those are great points. I'm worried though, Paul, that there's going to be huge tariffs on avocados, limes. Mexico mines. I think they're the largest silver miner in the world now. So any silver that's imported into the U.S. is going to have a 20% increase in taxes on it, 20% increase in tequila. You think those things would get an exemption then? And Trump is just after the corporations that are moving the factories in, like you said, to Mexico?
Well, first of all, Jason, remember, as far as the WTO goes, he can't put any tariffs on anybody. They're illegal. We are a signatory to the World Trade Agreement. My understanding of the agreement is that you can't go around putting on tariffs. If you do, you get challenged and penalized. And that's why I suggested that the only way he could bring the jobs back would be by changing how he taxes, because taxation is a domestic issue. It's not a tariff. So he can achieve what he might achieve with tariffs through taxation in the way I suggested.
Okay, that's very interesting.
That's not a tariff, and so it is something to do with domestic decisions about taxation. So that, and even that might be challenged, but at least it's not a tariff, and I think it's something that he could do. Now, the other question, the question you ask is if he's just targeting the products made by American countries offshore, that's got nothing to do with anything the Mexicans make and send here. If they're growing avocados and they send them here, this is not because an American agricultural firm has sold all its land and gone to Mexico and bought the land and is using Mexican labor to make avocados to bring back to sell to Americans. So I think it wouldn't have, I don't think he's targeting things that the countries themselves make and sell in world markets. I think he's targeting or trying to target the American firms who move their plant and equipment offshore, laid off their domestic American labor force, wrecked the tax base of the cities and states, and now bring in production from abroad in order to raise their own profits. I think that's what he's targeting, and there's no reason for that to be a target on everything that a country makes that they sell in world markets.
My last question before I let you go has to do with what I think is coming, a war between the Federal Reserve and Donald Trump. Donald Trump has talked about he doesn't want a strong dollar. The Federal Reserve has already raised interest rates in December of 2016. They're saying they're probably going to do 3 interest rate increases, but given their track record in 2017, I don't think they'll do 3. What are the dangers, in your opinion, of a strong dollar on the dollar index, say at 105 or higher? What type of damage can it do to the global economy and any economic growth or jobs plans Trump has?
Jason, that's a really big question for the few minutes we have. The dollar is the world reserve currency, and A lot of people think, oh, if the dollar's strong, we can't export our goods and services. But what do we have to export? The manufacturing in the United States is largely moved offshore. I mean, what is it we make?
The U.S. mostly exports dollars, I think, at this point.
Well, that's about it. So I'm not concerned about that. The dollar as world reserve currency is a basis for American power because it means we can pay our bills by printing money. We don't have to earn foreign exchange by selling goods and services abroad in order to pay for our imports, because we can just print the money to pay for the imports because it's the reserve currency. So we don't have those kinds of problems. I have no idea why the Fed is raising the interest rates. Maybe they feel that they've bailed out the big banks now and that they're not faced with any more derivative crises, and therefore they are worried about the fact that for about 8 years now, insurance companies, pension funds have had no interest income, such that their bond investments that they use to balance their stock portfolios have produced no income, and so the pension companies are behind the 8 ball. The insurance companies don't have the reserves they need, and therefore they may be saying, well, we've gone too far to save 4 or 5 big banks, and now we've got all these other people to worry about, the pension funds, the insurance companies, because we've wrecked their interest income. We've also wrecked the savings, the income off the savings of the retirees, because they can't get anything on their money, and so we've got to do something about that. I suspect that's what that's about. When you have these low interest rates that we've had these years, the main function has been to support the balance sheets of the banks that are too big to fail. And the cost has been paid, as I said, by insurance companies, pension funds, and by the retired people who were looking to supplement their Social Security income with interest on their savings, and they've had none. So that's what the Fed may be looking at. And of course, these little bitty 25 basis point increases don't do anything to help the retirees or the insurance companies or the pension funds. They need to get these interest rates back up to 4, 5, 6%, and that's a long ways off, because I think there's been so much currency arbitrage, so many deals based on these low interest rates, that if they change very substantially, those deals are going to come undone. So I don't think we can discuss all the ins and outs of that today.
Yeah, I think 6% interest rates would crush the economy, Paul. I think one of the main reasons, though, the Fed has done these token 25 basis point interest rate increases was to say they did one. So it gives them a little bit of credibility left with Wall Street. So Wall Street doesn't say, oh, well, you didn't do any.
Yeah, well, it's not clear Wall Street really wants any, but it can also crash the economy, Jason, if the insurance companies go down, the pension funds go down. If retirees, instead of having income on their savings, instead have to draw down their capital. So that's the other side of the low interest rates, and maybe that's what's bothering the Fed.
Yeah, I completely agree. There's a lot of economic landmines out there. I want to thank you for your time today, Paul. And if our listeners want to read your articles, like about how the left is destroying itself, which is your new piece, where can they find your work?
Just go to my website. It's just my name, paulcraigroberts.org. And they'll find them there. And we'll talk again sometime, Jason.
Thanks, Paul. I appreciate it.
You're certainly welcome. Enjoyed speaking to you.
Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.